update for this Wednesday, October the 29th of 2025. This is George Popazov, Tradepro Academy. Move the camera a little closer. Not to give you any motion sickness or anything, but here we go. I hope you guys are having a great day. Today's the big day of the week that the markets have been waiting for. Today is the Federal Reserve Federal Open Market Committee Day number 2. So the meeting started yesterday, but today is really the decision day. Today is what impacts the market. And markets right now are kind of mixed across the board, but stable. All right, in Europe, stocks are slightly up. DAX is the main exception. It's down. In the U.S., stocks are modestly higher, but not too much, mostly consolidating gains from yesterday's session. On the commodities front, oil is up 0.3%. Gold up 1.8%, back above 4,000. It's a key level for gold. And copper is up near record highs, up 0.5 percentage point as well. In the crypto space, things are mostly down. Bitcoin down 1.3%. Ethereum down almost 3% in today's session. Okay, so what news events are we going to have? Obviously, the Federal Reserve at 2 p.m. Jerome Powell the report's going to be announced at 2 p.m. on their decision of the Federal Reserve cut, along with the dot plot, along with the SEPs, the standard economic projections. There's going to be a lot of information the market will digest. And then at 2:30, Jerome Powell will do a press conference where he answers questions, which will add additional volatility after just having 30 minutes to digest that report. And then the market should get pretty active and volatile throughout the whole thing. From 2 p.m. all the way until the closing bell, it's going to be wild. All right. Other than that, though, 10 a.m. we have pending home sales. It's a low impact report. But the month-over-month one is kind of a normal impact. And we don't really have too many news reports. So it's something that's going to be interesting because the government shut down and not much news is coming out. So there will be a little bit of more attention on pending home sales than usual. All right. Now, the rest of it's going to be the Federal Reserve stuff and then the trading plan and a little bit of Trump and Xi. Why don't we do Trump and Xi's update now and then wrap it up with the Fed stuff, because the Fed stuff is a little more bulky. There's a little more bulk to it. All right, Trump and Xi talks are back in focus. They're going to have a 3-hour meeting tomorrow, President Xi and President Trump. All right, Donald Trump says he expects to cut fentanyl-related tariffs on China and discuss farm trade as well as NVIDIA's new Blackwell chip. All right, China's department bought 180,000 tons of U.S. soybeans. It looks like a goodwill gesture to say, hey, look, we're here to talk in good faith. Let's buy some crops just so you can see we're into it. All right. And President Xi also confirmed President Trump's comments by saying it's going to inject new momentum into the talk. So that's happening tomorrow. So you think the volatility is over today after the Fed? That's wrong. There's more tomorrow as well on the talks. And then Friday, it's going to be the day that we close out this whole crazy week. And that's going to be a really good opportunistic day. Okay, I'll talk to you about the trading plan today, but it might surprise you what we're going to do, what I'm going to do at least. What you do is up to you. All right. Earnings, we have Meta today, Microsoft, Alphabet, Starbucks, and Boeing, Caterpillar. We have a lot of earnings reports on today's session, so factor that in. All right, and you're getting kind of a big soup of things to have to look out for. All right, here's the Fed. And the rest of it's going to be the Fed because there's a lot to talk about on the Fed. All right, 25 basis point rate cut at this point is factored in. All right, it's pretty much a foregone conclusion. It would be a shocker if they didn't cut the rates. So this isn't really what the market's looking for. It's not looking at whether they're going to cut or not. The cut is already assumed to have happened. It's priced in. A not cut would be a disastrous thing for the market. It would drop probably 200 points in 2 minutes. All right. It's fully priced in at this point. Some people expect Governor Moran to dissent and push for a 50 basis point cut. All right. It doesn't matter though. It's not going to cause much commotion. They're going to say, hey, we could have had a bigger cut, but only one dude wants it. All right. The key focus in this entire meeting is the balance sheet tweaks. All right. And whether the runoff ends early. Like with the Federal Reserve particularly, there's so much terminology that I'm convinced it's designed to confuse you. It's like if you don't know we're talking about, then maybe you're going to just ignore this important data that pretty much is a private institution, the Federal Reserve, and one of the richest banks in the world, all these feds, controlling the most significant economy and steering the policy by which decides the fate of the economy. But it's a private institution, and let's make it purposely confusing so you don't understand. Balance sheet runoff just basically means the Fed has bought a bunch of assets. What happens when the Fed buys a bond on the open market? Well, they take the bond out of the U.S. government, and they do what? They give the government money. That's how you buy stuff. Give me stuff, take my money. All right? So by buying all of these assets, they were quantitative easing. The strategy was easing. It was giving money to everyone. Liquidity was circulated in abundance. Well, that changed and it started to tighten. And running off these assets means I have all these bonds on my book. When they come due, because bonds are due, all right, what's the difference between a bond and George? A bond eventually matures. Classmate in my finance school ran that joke during a presentation. We all laughed, myself the most. All right, so when these bonds run off, they basically mature, unlike me. And instead of the Fed doing anything, they just let them run off. They fall off the balance sheet, they're gone. But that is actually quantitative tightening, because that money that was in the economy that you paid for that bond is now coming back to you. So you're taking the money back and you're not recirculating it into the economy by buying more bonds. So this balance sheet runoff, as it's called, is essentially withdrawing liquidity from the market. It's tightening liquidity and conditions in the marketplace. The whole meeting right now is focused on that one aspect. Now that you understand what runoff means in quantitative tightening, quantitative easing, and how it's done, now you understand the language. All right. Watch what Jerome Powell says. The thing is, we don't know what he's going to say. Obviously, if he increases the quantitative tightening, the pace of that, not good for the market, less liquidity, market down. If he accommodates it a little bit more, good for the market up. Typically, now there's the thing about the Fed is so many people are hell-bent on learning how to read the Fed. If Fed does this, market does this, my trade does this. All right, but the problem is, rather, instead of putting the market in the middle, they say, if Fed does this, my trade is this, what does the market do, question mark. It's the other way around. You know, forget the Fed. You could scratch them out. They're going to be talking a lot more than me, believe it or not. Scratch out the Fed. What they say and do is irrelevant. Look at the market. If you're going to trade it today, you're not looking at the Fed and then your trading plan. You're looking at the market and the trading plan, because the market is the instrument you're trading. If this was just about your well-being, about you and your kids and the future, and there was no money involved, and it was just legacy planning and you could look forward, or some kind of portfolio model that you were an analyst in, you listen to the Fed. 100% you listen to the Fed. That's your person. But if you're a trader, you listen to the market. I can't stress this enough. Just want to bang this inside your head with like a hammer, just until it's stuck. All right? Don't listen to the Fed if you're a trader. Listen to the market if you're a trader. That's what you're trading. All right? Okay, so with the balance sheet stuff, there's going to be a possible shift to Treasury-only holdings. All right? Fed may halt Treasury runoff, but let MBS roll off slowly, mortgage-backed securities. All right? Or it could, tighten the liquidity because the SOFR tightened as well. All right? And it actually spiked recently. There's all these... Does that mean anything? I can explain all that to you in 1 hour long presentations with 60 slides. Who cares? Because you're reading the market. All right. Here's the cool part, though. The dual mandate stresses that inflation is cooling, but jobs are also weakening. So low hire, low fire type of phase, right? It's a weird job market. So a slowdown in the jobs market could push the Fed to ease more in December. But what was the jobs report like last month? I don't know. All right. What's it going to be like this month? I don't know. We don't know. The Fed doesn't know, because the BLS, the Bureau of Labor and Statistics, hasn't put one together, because there is no Bureau of Labor Statistics. The government shut down. That department doesn't exist. Okay, so we don't know, and let's see how the Federal Reserve is going to take that into account. What is Jerome Powell going to say? That's a big question mark about, will the lack of jobs data stall their decision making? Does this December rate cut that's also planned, is it a done deal and a foregone conclusion as well? Or is there going to be certain things that now are going to prevent it from happening, like another month of a government shutdown, which would make it a record long time? So there's a lot of things you could be listening for. But again, what do you listen to? Listen to the market. The market's going to tell you everything. All right. This isn't just about a rate cut, this Fed meeting, and it drives traders crazy because they wish it was easy to interpret, but it's not. It's like an economic type of news report that's actually pretty deep, economic and monetary policy. It's about whether Powell signals the end of QT, all right, and the start of a deeper easing cycle. That's the question. If Jerome Powell pleases the market by saying we're going to end qualitative tightening and we're going to start, relaxing the rope a little bit around your neck, then the market's going to breathe and it's going to rally. All right. Does he sound confident or concerned? These are the things we're looking at. My TradingView dashboard, I have a dashboard that looks at all the same things that the Fed does, because the Fed, yes, they have some inside info, but primarily they're looking at all their entire things that steer monetary policy we have access to as well. You just have to know what to type into TradingView to follow this stuff. All right. But my SOFR and Fed funds rate are both pricing in 25 base point cuts. All right. The risk is hawkish tone or a slower path. All right. The yield curve is still inverted, which is the market's way of saying, this policy is too tight. Like the noose is too tight around our neck. Let us breathe. The market needs a little more accommodation, a little more liquidity, a little bit more loose monetary policy to support it. More supportive stance from the Fed of stocks in the market, not the economy, the market. All right. That's what my dashboard says. My dashboard said the Fed is late. All right. So we have like a asymmetric setup right now. If you're hawkish, meaning tighten the thing, no more rate cuts, like if you're driving monetary policy hawkish, which means more firm, less accommodative, there's going to be a sharp drop in the market, like a super sharp drop, because that's a left hook if I've ever seen one out of nowhere. Okay, the Fed's been setting us up for weeks and now months for this. And then if they cut, but they're hawkish, and Jerome Powell's hawkish in his press conference, look for a 100, 200 point drop. It could get very ugly because it's a surprise. The reason it's asymmetric is that if it's actually dovish, we might just see a small squeeze higher. And this is where we start to kind of become real smart traders and say, look, if this thing is dovish, how dovish is it? Let's see how the market reacts. And remember, the upside, we're already at all-time highs. 6,700 is the level above which, we rally big time on the S&P 500 futures. That's where the option skew is, right? So let me get now into the trading plan. I'm going to do this in a little bit of a different order, my trading plan, and then give you the rest of the stuff, right? Because this is where I want to kind of start to caution you, and we have 2 to 3 minutes, and I'll be done. Okay, this is my trading plan. This morning it's going to be quiet, more eerily quiet than usual, but we're consolidating an all-time high. Quiet is not a bad thing when we're consolidating an all-time high. All right, 1 hour before the open, so roughly 45 minutes ago, we had 120,000 S&P 500 contracts traded. Right now, we have 135,000, so we traded 15,000 contracts. That's not a lot of volume at all. That's really low. All right. Margins in most brokers are increased. I got the margin increase notice in the email last night saying from the Globex reopen at 6 p.m. Eastern until shortly after the FOMC event, margins are going to be 25% of the exchange margin, which for the S&P 500 contract could be up to $25K, 100%. So it's around $6,000. All right. The margin now to trade one ES, one micro is $600. So your broker's already telling you something that I'm about to tell you too. All right. Big traders, they're waiting. Why would you do a big trade right now? There's no liquidity. There's no counter movement for you. There's no opposing liquidity to trade with. If you want to buy, good luck finding sellers. If you want to sell, good luck finding buyers. Everyone's waiting. Everyone's pulling and peeling limit orders off and kind of drying up liquidity. You could already see it on the ladder. Watch right like at 150. The thing's going to be down to like 9 contracts up and down, which is spooky. All right. Small traders might even be waiting. I don't know. Retail traders, I don't know what their plan is today, but I'll tell you what mine is. All right. I'm taking today off completely. I don't want to look at a chart. I don't want to listen to Jerome Powell. I don't care what he says. I don't care what he does. I don't care where the market trades to. I don't care what President Trump says about President Xi. I don't care, frankly, if the world blows up because, I I don't have much control over that. Today, I'm gone. I'm out of office. The door is shut. The phone is off. And I even left my work phone on the corner of the desk with the curtain to my office open to suggest that even if you try to call me, I will not pick up the phone because it's right there in front of you. That's my approach to Fed days. And I love it. I get to do some stuff today. It's not trading related. And in fact, I booked an appointment today specifically on purpose so I could be away from the computer. But if I was to trade, I'd look to trade the 69.50. My bad. I said 6,700 for the gamma explosion upside. It's 69.70 to 7,000. 6,700's gone a long time ago. Pardon me. I'm issuing a correction. Caught myself. All right. If I was to trade, I'd fade the 69.50 area and try to get long the 25.30. I would trade the range rather than the expansion away from the range. I think we're going to stay within the range until we get this new information now that we're waiting for with Powell. All right. I'll be on the sidelines today. I used to trade big volatility news and events. All right. Now I just don't. And you're going to ask me why. I could give you a million reasons as to why I don't want to trade it now, but then why I also traded it in the past. One of them is I was younger. I could tolerate it. All right. I needed it was the other reason. You know what I'm saying when I say I needed it? I was hungry. It's like I want to make more. I want to make more. Now I'm in a place in my life where I'm chilling. Things are good. Life is good, So it's too much stress. When it goes great, it feels too fantastic. When it goes wrong, it goes too terribly wrong. And when you balance those things out, you're giving away too much life, all right, from your body, from your future to trade a Federal Reserve third quarter statement. In the grand scheme of things, it doesn't matter to your life and your satisfaction. That's why I tell you, take the day off. I'm going to do it. I'm not even going to trading room. I'm going to trading room, say hi, and discourage other people from trading. Because the way I look at it, my job isn't to show you every trade and you copy my signals and you get rich off of me and we're all happy. All right. My job, I would never do signals. Signals is the worst piece of crap idea in the world. My job is to keep you away from the days that might get you wrecked and to give you support and education on the other days. Simple as that. All right. And so if I didn't tell you that not to trade, I would not be doing my job. So my job is just be careful. All right. If you do decide to trade, put limits within your trading structure. How much are you willing to lose? What's the maximum? What's the maximum contracts you're going to trade? And expect to have a kind of day where no matter what you expect, the outcome will actually be different. No matter how intelligent you are, how much varying and different expectations you have, whatever you think is going to happen is precisely what's not going to happen today. Be ready to trade in those conditions. Have some kind of limits around it. The last thing I want to hear is that you blew out your account on a stupid Fed day. All right? That's that. I'm not even going to give you more on daily levels and all that and call wall activity on options. Why would I give you that if I don't want you to trade? You guys have a great day. I'm going to turn around and answer some questions real quick. And we'll call it a day. We'll call it a day. Let's see. Good day, sir. OTM, what's up? Good day. Ulrich, good morning, sir. Mikado, hello, bro. Hope you're well. David, David, yeah, buddy. I went to the barber. I looked I looked at one of my lives yesterday because it was causing us problems. And I was like, how can I go live looking like this? I look like a homeless man under the bridge. Not that they look bad. I mean, it made me sad when I said that, but I'm like, I look very, very rough. So yeah, bro, I went to take care of business. I The barber is one of those things I always think I go to more often than I do. But then I looked at the last confirmation for payment. It was like 6 weeks ago. I'm like, oh, well, Thank you for noticing, David. Yeah, bro, I used to trade Fed days, but now I don't at all, to be honest with you. It's not that it isn't possible, brother. It's just that it's a lot, right? Like, even when you win trades, here's why, David. I'll give you the truth. Even when you win trades, they feel like they're luck, all right? And when you lose them, it's your fault. So at the best case scenario, you might get lucky. At the worst case scenario, it's going to be your fault. And if you do get lucky, you already know it's still your fault because you took the risk. Because the thing with these kind of trades is, if somebody comes in with, 3,000 lots in the market, liquidity is already thin, and they want to sell. Let's say it's a fund. They want to sell 3,000 contracts because their model says to hedge their portfolio. However, it's not relevant to the level. It's not relevant to what Powell said. It's just this fund needs to get this transaction done. And they hit the bid to sell it, and the market tanks. You're going to say, oh my God, it shorted off this level. I'm going to wait for a rebound. Boom, it goes right through that rebound because then another fund decides to buy. So you're getting whipped around by some pretty big money today, and it doesn't really mean as much as it would on a regular day. Order flow is less meaningful today. Your levels, less meaningful today. Like, nothing really matters as much as it does on another day, because right now it's the story of how will these big Titan traders readjust their portfolios. This is what the S&P 500 does. It's an instrument to help you adjust your portfolio. It's a hedging instrument, all right? Primarily, this is how big traders and hedge fund managers and portfolio managers use the S&P. It's a hedging instrument, an exposure instrument, but mostly a hedging one. So, there's going to be people rolling hedges, adjusting, and we're going to get our hedges beat off the concrete trying to pick up pennies in front of that steamroller. So, yeah, hopefully that helps. Does that make sense? And it took me a long time to get to that conclusion because I had just enough days, good days on the Fed. Remember, I've been trading since 2001, and the Fed's been important since 2009. Before that, no one cared about the Fed as much. All right, 2009, what happened? Housing market imploded. What happened right after that? Ben Bernanke introduced the TARP, the Troubled Asset Relief Program. All right, that's what the Fed dependence and the market married together to be important. So, yeah, I used to trade them, and I had just enough good Fed days to convince myself it was worth it. Now that I'm older in a different place, I don't really care. It's okay to take one day off and approach it well rested tomorrow when things settle. I'd rather not be in the fight. I'd rather see the fight be won by somebody and then come in and reanalyze. All right, I think I'm just blabbing at this point. I love you guys. It's been a long update. Take care. Have a great rest of your day. If you do decide to trade, have some risk controls and parameters in place. You'll be fine if you do decide it. Sometimes I'm too strong in presenting my opinion. I think people should stay away. If you decide to do it, as long as you have risk parameters, what's the worst that could happen? The worst that could happen is you don't follow them, all right? And that is going to be what costs you the most today. Other worst cases, you hit your risk parameters, it was worth a shot. Have a limit, all right? Trade within it. That's it, guys. Love you so much. Have a great day. Tomorrow we'll break down what happened in the Fed and some of the meaningful things for the market, and we'll go from there. All right, you can see I'm in sim mode right now. I have no intention of doing anything. And that's how I usually am at this time of the day. Take care.